So, folks, we just learned that Orange County is like most of the country. What do I mean by that? Well, it's a bifurcated market where the high end or luxury market, whether it's South County above 2 million or all of Orange County above 1.6, it is frozen solid. We've also learned that first time entry level homes are selling fast. So, what I want to do with Adrian is talk about what should agents do today, because there are agents that watch this channel from around the country. And I believe most markets are frozen on the high end and moving pretty good on the low end. And talk about what investors should be doing, whether you're flipping, wholesaling, or a buy and hold investor. Adrian, how you doing, man?
I'm doing great. It's interesting to see these numbers. And for those of you that didn't watch the video, go back and watch it. And when you watch it, really listen to what Zuber is saying and take the time to figure out your numbers in your market, right? Because that's going to tell you, and what we're going to explain today, unless you know your numbers, what we tell you today is going to be it's like throwing a dart in the middle of a dark room, hoping to hit the bullseye, right? It's not going to happen. Yeah. So when we really look at this, if you're an agent, right, let's take a look at where you're going to earn the most amount of dollars per hour, right? That's one thing I'm always focused on.
Yes.
As an agent or as in, somebody that goes to work every day, how can we maximize our ROI per hour? So if I was an agent and that was my strict business, I would not be going after anything above the double of the median price, as we just learned in our numbers, right? Why? Because we have a 3-month supply of luxury houses. The amount of time it's going to take me to get that home sold, actually get it into escrow, and figure out when I'm actually going to get paid, you're going to be waiting till December.
Yeah.
So, for all of us, I would take a look at what is your median price point and go below that. Right? If you're an agent, I would be going after that bottom end market. I would be going after the fixers. I would be going after the people that have to do something versus I just want a price, right? Well, if I get 800, I'll sell it. I'm not talking to those people, right?
No.
There's no motivation. I'm going to waste a bunch of time.
Yeah. I think there's a couple of things. We'll talk about agents first. I love that you went there. I believe for the first time in 4 or 5 years, at least, agents need to be thinking about return on time. Return on time is not something you ROT. It's not something you think about the last 2 years because you stick a sign in the ground and everybody gets paid. I believe for return on time. And again, you have to check if you're thinking about return on time as an agent or broker, you have to check your ego, because your ego wants the flashy home. The ego wants the front cover of the magazine. Your ego wants your name on the $4 million listing. You don't get paid for that, folks. In fact, many of you are freaking burning capital.
Tons
getting
of it.
on them. Yeah, getting on the magazines. What are you doing? Seriously, what are you doing? So yeah, it's all about return on time. And when I look at these three markets, the return on time, unless it's like the top 1% of the 1% in your market, and folks, you don't have that listing, you're not going to get it in the luxury. Avoid.
Yep.
Even the middle market, right? What I call the move up market. We just learned that market's it's tough. What I would be looking for if I was in that market is what's going on with the seller. Right. Because again, there are motivations. Maybe there's a deal there. And yes, there will be some buyers. Are they coming out of area? Right? Are they moving into the area? They sold in a higher priced area, so maybe they're not as price sensitive. But again, even in that mid-market, that mid-market is going to be tough unless we get interest rates sub 5%. If interest rates go below 5, which I am not calling for, but if they do, that market will start to pick up steam. And then there's the only market I would focus on. I would go median and below. I would door knock. I would drive for dollars. I would have conversations because, again, fixers, entry-level homes, all of that stuff's still moving.
Yep.
And we're seeing FHA come back, and we're seeing a VA come back. These buyers, look at NAR, National Association of Realtor reports, they're all increasing.
Yep.
Most markets, median and below, are FHA lendable homes. So that if I had to feed my family on real estate commission, every hour, every minute of every day, I would be at median and below, and I would ignore luxury. I might opportunistically take mid-market, but I would ignore luxury. What do you think of that?
No, I agree. And so when you guys are pulling your cold calling list, make sure that you're narrowing down year built, Make sure you're narrowing down. There's some where you can look at value, right? Make sure you're putting no more than, let's just say you're in Orange County, right? For an example, and our median was 800. I'm going to put on, when I'm running my data on the cold calling, I'm going to go anything below 800. If
Yeah,
I'm doing
exactly.
circle prospecting, I'm going to go more Santa Ana, more Anaheim, right? If I'm in the Inland Empire, San Bernardino. So take a look at that. One thing I used to do is I would pull up a map of my city, and then I would go, okay, where are the median homes, right? And then I would look at all that track and go, okay, now let's focus on the distressed people in this area. So let's pull up NODs. Let's pull up pre-foreclosures. Let's pull up probate.
Exactly.
Let's go after those first. Our ROT, our return on time, is going to be much higher because now it's not 500 calls to a contract. Now it's 100 calls to a contract. And instead of spending 30 hours to get a listing, you're only spending 10. You get the point. So for all of us, switch up your list, switch up who you're calling. If you've been calling the same list, switch it up. I think data is very important. If you're going to go door knock, go to door knock in the right neighborhoods. And then if you're a flipper, right, this is important. If you're a flipper, do not go buy anything in above the median price point. Like I just wouldn't, right?
Yeah.
Unless it's in a unique neighborhood.
Yeah, I mean, I wouldn't touch it. I think there's a lot of people that hear us say don't buy above the median except in a unique neighborhood, and then they all tell themselves they got the unique.
It's a unique neighborhood.
Yeah, no, there are no exceptions. There is not a flipper on the planet today that should be flipping above in the luxury homes, and if you are, you're taking your risks.
Yeah.
But
some of them can afford it.
Yeah, hey, people watching this channel probably aren't on that list. So let's not confuse people. But yeah, when I think about investors in this arena, and again, when we talk about flipping below, and again, it's the after repair value. So let's use Orange County. Don't buy a home for $750 and say, well, I bought below the median. No, your ARV is 1.1.
Yep.
Your ARV. The ARV below the median home price.
Important.
So, and then second, just because I am a opportunistic jerk, I am personally looking to buy a luxury property as a rental, right? This market's broken, frozen. So why am I telling you to do one thing and the other? Well, hear me here and let me be very clear. I am trying to buy Park Place or Boardwalk with seller financing that allows me to put a little money down, have seller financing payments that allow me to cash flow day one. This is going to be a very structured deal. It's going to have a massive balloon payment in 10 or 20 years, which I assume luxury will be okay in 10 or 20 years. So I am looking for the diamond in the rough every day. So I want to be very clear. I am looking to buy a luxury rental that will cash flow day one with very little cash down and a 10 or 20-year balloon. So if you're going to do that also, by all means, but be very careful. No alligators. Most luxury homes are massive alligators, which I will never buy.
Yep.
Make sense?
So good. I like that. I like what you said. It reminds me of there was this talk that I was hearing called Finding Opportunity in Chaos. Exactly. And the luxury market is nothing but chaos right now. But there's
great pain, there is great opportunity.
I love that. That is awesome.
Yeah. Adrian, if someone wanted to buy in Orange County or be a part of your team, how would they do that?
At Instagram, at Adrian Hernandez. Really appreciate you guys. Thank you.
You got it. Take care.